All right, TalkTickers listeners, ready for another deep dive? Today, it's General Dynamics Q3 2024 earnings call.
Fighter jets, submarines, the works.
Exactly. We've got their transcript right here, plus some stock market data to see how Wall Street's feeling.
Should be interesting.
Absolutely. So we're on a mission to figure out where GD's cruising, where the turbulence is, and what's on the horizon for them.
Sounds good. Well, right off the bat, GD's having a pretty strong year. Revenue's up over 10% this quarter.
Wow. Over 10%. That's impressive.
It is. And a lot of that growth is coming from aerospace and marine systems.
Makes sense given the global climate. But I'm sure there's a but coming.
Well, no earnings call is perfect. Their new G700 business jet, they hit a few snags.
Oh, I was reading about that. Didn't they miss their delivery targets?
Big time. Planned to deliver about 15 this quarter, but only 4 actually made it out the door.
Only 4. Ouch. What happened?
It was a real chain of events. Engine delays due to some certification holdups. Then those fancy customized interiors, they needed more certification too. More complex than they anticipated, I guess.
Right, I read they have all sorts of bespoke options.
Exactly. And then on top of that, a supplier had a quality issue. Had to swap out parts on some of the jets.
Okay, engine delays, interior hiccups, part swaps. Sounds like they had everything but the kitchen sink go wrong.
You forgot the hurricane.
Wait, there's a hurricane in this story too.
Oh, yeah. Hurricane
Wow.
Helene hit Savannah right where GD's Gulfstream HQ is. Caused 4 days of lost productivity.
Oh, of course a hurricane. Why not? So what's the damage? How badly did this G700 mess up hit GD's bottom line?
Well, their earnings per share forecast is down to about $14 now, which is lower than they initially projected.
Not good. But are they expecting to recover? Any chance those G700s will take off soon?
They're projecting a big finish to the year with 27 G700 deliveries planned in Q4.
Wow, 27. That's a lot to squeeze in.
It is, but they're confident. They're also still banking on the G700 to bring in good margins once they work out all the kinks.
They'd better, after all this. What about their other jet, the G800? Is that one on track?
So far, so good. They're expecting a smoother launch for that one.
Fingers crossed. Okay, so things are a little shaky up in the air, but what about underwater? Marine Systems is doing well, right? All those big Navy contracts.
They are booming, yes, lots of submarine contracts. But there are some underwater obstacles, too.
Oh, submarine problems. Do tell.
It comes down to the suppliers. They're struggling to keep up with demand, leading to delays and pushing up costs.
A submarine supply chain bottleneck. That's not ideal.
Oh,
Is this just a GD issue, or is it affecting the whole industry?
it's actually hitting the whole defense sector. Soaring demand, rising manufacturing costs, and the post-COVID worker shortage, it's all adding up.
Perfect storm.
Pretty much. And remember, GD builds 2 main types of submarines, Virginia class and Columbia class.
Right, the Virginia's the older workhorse, and the Columbia is the new fancy one, right?
Yeah, you got it. And the Columbia is the top priority right now. It's getting most of the limited supplies. So that puts extra pressure on the Virginia program.
So not only are there general supply chain issues, but the Virginias are also getting pushed aside for the Columbias. Okay, so G700s are grounded, submarines are in a supply chain traffic jam. Anything going smoothly for GD?
Well, their combat systems division is actually doing great. Steady growth, strong margins, good backlog. Tanks and munitions seem to be less complicated than jets and submarines these days.
Thank goodness for small victories. At least one part of the business is hitting the mark. So before we wrap up part 1 of this deep dive, any key takeaways so far?
I think the big takeaway is that GD's facing some serious challenges, the G700 and the submarine supply chain being the main ones. But they're also in a strong growth market, and they have a diverse portfolio.
Right, and they've weathered storms before. So it'll be interesting to see how they adapt and overcome these hurdles. Stay tuned, listeners, for part 2, where we'll dig deeper into these challenges and what they mean for GD's future.
Welcome back to TalkTickers. Before we move on, I think it's worth taking a closer look at how those submarine supply chain issues are affecting the different programs.
You're right, we touched on it briefly, but let's unpack it a bit more. It's almost like a sibling rivalry, isn't it? The new shiny Columbia class getting all the attention, while the older Virginia class gets left behind.
It is a bit like that. And remember, that Columbia class is really important for our national security. So when resources are tight, yeah, it makes sense that it gets priority. But that puts even more strain on the Virginia program, which is already dealing with delays and cost overruns.
So it's a double whammy for the Virginia class. Supply chain problems, A&D having to play second fiddle. For those of us who don't build submarines for a living, What do these supply chain problems actually look like?
Imagine you're building a house, but the lumber, windows, plumbing fixtures, they all keep getting delayed. You end up with a half-built house, workers just standing around, costs going up. That's kind of what's happening with the Virginia-class submarines. Those delays are constant because suppliers are struggling to keep up, not just for GD, but for the whole defense industry.
It's like a domino effect. One delay ripples through the whole system. Is it just about increased demand? What's causing all this chaos?
It's a bit more complicated than that. Yeah, demand for defense products is going up everywhere. Geopolitical tensions, increased military spending, that all plays a role. But then you've got the pandemic hangover. Supply chains worldwide are still messed up from that. And then there's the cost of everything. Raw materials, energy, transportation, all putting pressure on suppliers.
Plus, that shortage of skilled labor we keep hearing about. That's affecting pretty much every industry.
Exactly. And it's not just building new submarines either. You've got to maintain the existing fleet, modernize them. That all takes resources too.
So how is GD dealing with all of this? Are they just waiting it out?
Oh no, they're being proactive. One thing they're doing is adjusting their production pace to match the slower lead times from suppliers.
Makes sense. Better to slow down than have things sitting around half-finished.
Right. It helps control costs and reduces inefficiencies from what they call out-of-sequence work.
Out-of-sequence work. That sounds like a headache.
It is. It basically means having to assemble things out of order because parts are missing. Imagine trying to bake a cake, but you have to frost it before you've even mixed the batter. Messy, inefficient, and expensive. So by slowing down, GD's trying to minimize those disruptions.
It's like hitting pause to let the supply chain catch up. But doesn't that raise concerns about meeting deadlines for both the Virginia and the Columbia?
Absolutely. It's a tricky balancing act. They need to keep those submarines coming, but they also need to manage costs and keep the quality up. High stakes for sure.
Okay, so trouble in the air with the G700, choppy seas with the submarines. Is there any good news for GD?
Actually, yeah. While aerospace and marine systems are struggling, their diversification strategy seems to be working. Their technologies division, the one that focuses on IT services and those kinds of things, they're doing better than expected.
So they're not putting all their eggs in one basket. Tell me more about this technologies division. What's their secret?
They're really tapping into that digital transformation that's happening across the government. Their IT services arm, GDIT, has been investing a lot in what they call digital accelerators.
Digital accelerators. Sounds futuristic.
It is. Think cloud computing, AI, cybersecurity, all the cutting-edge stuff that government agencies want.
So they're riding the tech wave, but specifically for the government.
Smart. Exactly, and it's paying off. GDIT is winning contracts, growing their market share, and their margins are looking good.
Sounds like they found a sweet spot. Meeting those unique government needs with the latest tech.
You got it. And it's not just GDIT. Their mission systems business, the one focused on radar, electronic warfare, communication systems, that's doing well too.
So the jets and submarines might be facing turbulence, but the tech side is soaring. It's a good reminder that GD is more than just hardware. They've got a whole portfolio to help them weather these storms. But what about the financials? How are those G700 delays and supply chain issues impacting their bottom line?
That's the million-dollar question. And to answer it, we've got to look at the numbers. The good news is that GD's cash flow is strong. They generated $1.4 billion in operating cash flow this quarter, with every segment contributing.
Okay, so they're not hurting for cash. But we know they have some debt to deal with too. How's that looking?
Their free cash flow, that's what's left after capital expenditures, was $1.2 billion. That's 131% of net income. So they're making money and managing their investments well.
That's a good sign. But I remember you saying that the full-year free cash flow might fall short of their target. What's up with that?
Remember those G700 deliveries that slipped to next year? That pushes some of the cash flow into 2025. It's just a timing issue, not a fundamental problem.
So the money's coming. It's just delayed. Okay, that makes sense. But what about their debt? Rising interest rates can't be good for a company with debt.
True. GD has a net debt position of $7.2 billion, which is down over $700 million from last quarter. They also have another $500 million in debt maturing in the fourth quarter.
So they've got some bills coming due. Should investors be worried?
They seem to have it under control. They plan to repay that upcoming debt with cash on hand, and their strong cash flow gives them some flexibility. Those rising interest rates are a factor, but they're managing it.
Welcome back to TalkTickers. All right, we've explored the ups and downs of General Dynamics Q3. Strong revenues, but those supply chain issues and the whole G700 situation are still looming. Time to really dig into the numbers and see what it all means for investors.
Let's get into the financials. The good news is GD's cash flow is solid. They pulled in $1.4 billion in operating cash flow this quarter, with every segment contributing.
So they're not exactly hurting for money, but they do have some debt, right?
Right.
How's that playing into things?
Their free cash flow, that's what's left after capital expenditures, was $1.2 billion. That's 131% of net income. So they're making money and managing their investments well.
That's encouraging, but I thought you mentioned their full-year free cash flow might be a little lower than they hoped for.
Right, well, those G700 deliveries that got pushed to next year, that shifts some of that cash flow into 2025. Just a timing thing, not a fundamental problem.
Okay, so it's coming, just a bit later than expected.
Got it. What about their debt situation? With interest rates going up, that can't be easy for a company with debt.
Yeah, you're right. GD's net debt is $7.2 billion, which is actually down over $700 million from last quarter. They also have another $500 million in debt coming due in the fourth quarter.
So some bills to pay. Anything for investors to worry about.
They're on top of it. The plan is to pay off that upcoming debt with the cash they have, and their strong cash flow gives them options. Interest rates are definitely something to watch, but they're handling it proactively. So, not a red flag, but maybe yellow light for now. Big picture time, taking everything into account, how would you assess GD's overall financial health?
I'd say they're in good shape. Strong balance sheet, good cash generation, managing their debt responsibly. The real question is how well they execute on their plans moving forward.
Exactly. We've got to tackle those supply chain issues, deliver those G700s, and keep costs in check. It's a lot to juggle. So, for our listeners who are wondering about GD stock, buy, sell, or hold, what's your take?
GD is a major player in the defense industry, diverse portfolio, long history of success. There are definitely challenges, but also some strong tailwinds. For investors who are in it for the long haul, GD still looks like a good opportunity.
Yep.
But it's crucial to stay informed and see how they navigate these next few months.
Great advice. Well, TalkTickers listeners, that's our deep dive into General Dynamics Q3 2024 earnings call. We covered a lot of ground here, from those strong revenues to supply chain headaches and everything in between. Hopefully you got a better understanding of where GD stands today and what might be on the horizon.
Absolutely. Remember, this is just a starting point. Earnings calls are like snapshots. The real story unfolds as companies put their plans into action. So stay tuned, keep learning, and thanks for joining us on TalkTickers.